U.S. government is going to slash its AIG stake in half. Paul Vigna joins us, my Markets Hub co-host colleague.
Rolf, how you doing?
Big
Good morning
news.
to you.
Good morning.
Good, yeah, pretty good news. So this is going to be, I believe, the fifth sale of AIG, the government stake in AIG. They've been paring the stake down, about 50% right now. They're hoping to maybe cut that under 20%, depending on how the sale goes. Planning on selling $18 billion worth of AIG shares. So
is this something they announced, by the way? I'm just curious, because when you say we're going to sell this much stock, doesn't that maybe hammer the stock in advance, or people have just been expecting this sale to come?
I mean, they've been slowly paring down the stake. This has been a plan all along. They know this. So the stock actually, I think it's down a little bit today, but it's not doing so bad. Okay. But it's up 47% this year. Okay. So, I mean, as the government's been selling the stock has been going up. So I think normally that might be the case, Ralph, but in a case like this where it's a government, they took them under receivership, they're trying to get them back on their own 2 feet, it's actually taken as a good sign. So that's what you don't see the stock getting hammered.
Let's talk more broadly about the markets this morning. They are off slightly?
Off slightly, a little weakness here in the U.S. stock futures, down, only down about 20, not a huge number. Dollar's down a little bit. The euro's up almost 128 this morning, actually. Big news, not huge news, but the biggest piece of news we have right now, some data out of China on import and exports. Imports were down much sharper than expected. Bad sign for countries like Australia, Brazil, anyone who wants to send their goods over to China, especially the commodities countries. Bad sign there, bad sign for the global economy. So that's kind of put a weaker tint onto everything coming after Friday's jobs reports too. I mean, it's just, one more bad sign thrown on there. So that's what you're seeing here. That's what you're seeing. This is going to be a very squirrely week. You got a lot going on.
So it's Monday. What do people have to look forward to?
You have an two-day FOMC meeting this week. Speculation just rampant that they are going to announce something. Don't know the size of it.
We're talking about Ben Bernanke, the Federal Open Market Committee, and basically we may get QE3.
Right. I mean, this is
after the week Friday
meeting where they set rates. Rates are at zero; those aren't going to change. But this is where they will announce any kind of stimulus programs if they're going to announce one. A lot of speculation that they will announce one. Don't know yet, obviously, but we'll find out. You also have a German court ruling. This is a highly, highly anticipated court ruling.
Describe that briefly. It's kind of confusing. People would think that the German Supreme.
This is a German constitutional court. This is apparently just the preliminary ruling, too. They are going to rule on whether the European bailout fund not matches up, that's a poor word I'm looking for, but whether it's consistent with the German constitution. It's an issue of sovereignty.
Because what happens if it isn't?
They go back to the drawing board. If the court rules against the bailout funds, they say they contravene German constitutional law, then everybody goes back to the drawing board. It would actually be a huge mess. I don't think anyone really expects it, but it's a possibility. I mean, it is an actual possibility. Now, of course, you and I both know the rule of law was thrown out the window in 2008. So who cares? But this court might care. I mean, no one's really cared about the law for 5 years. This court might care. And if they do care, it's going to be a big mess in Europe.